What's going on, everybody? Welcome back. It's been a little bit since my last update. I've been monitoring my trading strategies or the different versions of the trading strategy that I have running right now, along with making some modifications. And it's July 9th, and I've been meaning to post an update about how things kind of closed out for the month of June. So I figured today would actually be a great day for an update because not too long ago, Bitcoin hit a new all-time high and just passed the 112K mark before pulling back just a little bit. So I've just been basically running my strategies over the course of the past month, just kind of keeping an eye on things. I was hoping to be to a point now where I could start going back to some live trading, but unfortunately, the performance still isn't where I want it to be, and I've got some upgrades in mind to the strategy that I want to try to do before releasing it out there to trade a small account with some actual funds. So anyway, why don't we go ahead and just jump into what these numbers are looking like here. And so from previous videos, I'll kind of break down a little bit what the difference is between these different versions of the strategy. So 2.4 is kind of like what my original version is now. It's got some stuff baked in there for order book imbalance, trade flow, monitoring trade flow from Binance. And so that's kind of the default strategy I was hoping to go live with. And what I found was, at least for Bitcoin, the trade flow and the order book imbalance data definitely seem to be kind of indicative of short-term price moves, meaning if the order book got seriously imbalanced in one direction, there was likely going to be a correction to follow. So that held true for Bitcoin, but for Solana and Doge, it was kind of inconclusive. And so I wanted to do an experiment to say, okay, I'm going to remove the order book imbalance and trade flow data from the strategy and see if it makes any impact on the results at all. And because if it's not adding any value, then why even have it in there? So that's the 2.5 strategy. 2.6, I shortened the time to live for my order refreshes way, way lower than it was. So for 2.4, the orders could be sitting out there for over an hour. 2.6, very short order times. I think it was 5 minutes or less. And then 2.6.1 is even shorter with 1 minute or less refreshing quotes. So these are the daily results. So average daily returns, standard deviation of the daily returns, and then the total for the month. So we'll start with Bitcoin here. As we can see, all versions of the strategy came out to be roughly the same amount of losses for the month, so roughly -4%. Now, the interesting thing is, and this is going to kind of be the case for all the coins that I'm trying out, is the standard deviation of the daily returns went way, way down when I shortened the time to live of the orders. So the orders are getting refreshed much more frequently. And so what I'm seeing is that the variability in the returns are actually greatly improved because of that. So that was encouraging. But as we can see here for Bitcoin, the returns themselves did not really change a whole lot. And none of these results are statistically significant, at least the amount of the average return. The standard deviation, definitely the drop is statistically significant. So definitely an improvement with the 2.6 and 6.1 versions that I will be keeping moving forward. So now moving on to Solana here, we can see that There is a pretty significant improvement as we shorten the time to live of those orders. So we went from an average daily return of almost negative 60 basis points to minus 23. And again, we see that the standard deviation of the daily returns drops quite significantly. So, as well as the total return for the month. So, still negative for sure, but we are heading in the right direction here. And then finally, for Doge, average daily returns somewhat improved. And again, the standard deviation is about half of what it was with the original recipe of the strategy. So, what I will be doing moving forward is so I've already disabled the 2.5 strategy altogether. I'm not trading that anymore. I did not really see any significant difference between the results uh, of the 2.4 versus 2.5. So this is basically removing the order book imbalance data as kind of a decision-making factor on where to place the quotes. So I'm going to be leaving the order book imbalance stuff in there and trading that moving forward. So basically, I'll be taking the 2.6.1 version, and that will become my next iteration. And we'll see if we can get to this to a point where we can actually go live with it and start trading some real money here. So I've got a few ideas of what I might want to look at for the next iteration on what information I want to add to this to try to get a bump in performance here so we can get the daily returns in the black. And we'll see if we can get this thing going to a point where we can trade it live. The other thing, I made a couple other changes. I was having issues basically since I'm trading this in a paper account. In the paper account, the Paradox test net, like most of these test nets, are crap because they aren't simulating real fills or not using real data. And so I have my own kind of paper broker that I coded that is simulating the fills for me. I was using the midpoint of the bid ask in the Paradox order book for this. And the thing I was running into is sometimes the order book just dries up on one side occasionally, especially on some of the thinner markets on Paradox, especially like Doge and some of the other smaller coins. And what I was seeing was the paper broker was then saying, "Oh, well, your midpoint like moved way up and you're short, so now you got stopped out, and I'm gonna, close your position out," and then it close out a huge loss where that wouldn't have happened in real life. So anyway, what I ended up doing with the paper broker is I'm actually pulling in the mark price from the exchange now rather than relying on the midpoint of the bid ask spread. And that's proving to be more reliable now. So I don't have these phantom stop outs that I was having previously. And then the other thing that I've added to my paper broker model is the funding rate. So the way Paradex handles the funding, it actually calculates it on a continuous basis rather than every hour or every 8 hours, or as some of the other exchanges are doing. So I'm kind of experimenting on running this algo and some of the other coins that are showing extremely high funding rates, either in the positive or negative direction, and seeing if I can use that as kind of a tailwind to help improve the performance. So, like, let's say, like for example, there's a coin that has a funding rate. Some of these funding rates are just getting crazy. 400% annualized funding rate negative, which means that the shorts are paying the longs, and so basically having the strategy kind of skewed towards the long side and not taking very many short positions or none at all, and just kind of being defensive on the long side, taking long positions when it feels it's safe. And so not only trying to collect the spread from the buys and the sells, but then also trying to collect the funding on the position that it's holding. So I've added the funding aspect calculations to the paper broker. So it's keeping track of any funding that's getting paid or having to get paid out, depending on if the position is long or short. So that's in there now, and kind of trading that on some of the coins that are showing very high funding rates at the moment. So, and then I've got my dashboard going here. I'll probably be disabling the 2.6 and the 2.4 versions in the not too distant future. I want to collect a little more data on them to just compare and see if I can get statistically significant results on the differences between the average daily returns. Like I said, the variances are definitely statistically significantly different, but the average returns, while they are different for sure, not at the 95% confidence level that I would like to see there. So anyway, I'll probably have the next version of the strategy out there and running in the next week or so. And in the meantime, I've been looking at some other kind of arbitrage opportunities between the different decentralized exchanges. Some of them between, just simple pricing discrepancies, but also some between the funding rates on some of the perpetual futures. I'm seeing like differences of 100% funding rates between the same asset on two separate exchanges. So in theory, you could go long on the exchange that's paying the most funding, short on the exchange that's paying the least, and then basically just collect that funding difference. Now the question is, how long do those discrepancies stay open for, and are they open for long enough to overcome the transaction costs related to opening and closing those positions? So that remains to be seen. The other thing too is just making a market on one exchange like Paradex, especially placing the quotes such that you can overcome some of the friction costs if you have to offset those positions on another exchange such as Hyperliquid or DYDX. So I'll be exploring that a bit more as well, but I would like to get this market maker strategy dialed in a bit more before I dive into all that good stuff. So anyway, would love to hear about what you guys are working on. If you have any questions, comments about what I'm doing here, would love to hear from you. So drop me a comment below, and I hope you guys are having an awesome week. See you later.